Hello guys, so today I'll be walking you through a breakdown of a setup I took recently on UJ. So it was a losing trade, as you can see on this screen. I was anticipating, to get some long positions. Everything was looking nice based on my strategy. All my confluences came into play, but it's just one of those setups which, form part of your edge. You can't always win every trade, regardless of how much you try. And sometimes it doesn't mean you did anything wrong if you are following your strategy. So in this case, I was following my plan. I took a setup. I've taken similar setups before and they've played out well according to my edge. So I understand that as long as I keep executing such types of trades within my plan, then eventually I'll still be profitable in the market. So this losing setup happened exactly on the 9th of July. Before I take my trades, I always want to make sure that the economic calendar is clean. And on the 9th of July, I think we had FOMC meeting minutes, which really doesn't affect how I trade. The news that I always avoid is the FOMC press statement, which happens the same day we have the Fed interest rate. Whenever we have the meeting minutes, I still trade normally. And I've taken many similar trades on such days and I've still been profitable. So on that day, the calendar was clean. However, I still took a loss on this setup because of the market not respecting my price action. And I'll get into that in a minute. I took this trade on my $100,000 account. I lost exactly about $1,000 on this trade, which was basically 1% of my account size. And it's very important that as a trader, you factor in risk management. As you know, even with the best strategies, if you're not managing your risk well, then eventually you might still incur some very big and bad losses. So you always want to risk in a way that even if I take 2, 3, 4, 5 losses, I still have enough room to take more trades and recover out of it. And for you to do that, it's important to predetermine your risk before taking any setup. So for this setup, as you can see, I lost only $1,000. And how am I able to know that? I lose only $1,000 for that trade. Personally, I always use a lot size calculator, which assists me to make sure I've determined the lot size I'll execute with so that I don't lose more than I'm willing to. The lot size calculator I use myself is called the Stinu app. It's basically a mobile app that you can download on your phone. And I was able to get my lot size is basically I head onto my mobile downloaded app. Then when I click on the Stinu, here I have a chance to calculate my lot size. The account I'm trading is $100,000 and the risk amount for that trade I wanted is about $1,000, which is basically 1% of my account size. Then the stop loss I use for my setups usually is 15 pips. It hardly changes. So we click on the next arrow. Now the pair I was trading is USDJPY. Then we press on calculate, and just like that, you can see for me to use that stop loss on UJ, it gives me the exact lot size I need to use. Sometimes you might find these lot sizes are changing, so it's important to always make sure you are calculating them per trade. So this just keeps me in check to make sure I'm risking the exact amount of money I want. And that's how I was able to lose only $1,000 on the trade, which was within what I was comfortable to risk. The best thing with Stinu is if you go back on their settings menu, here you can set whether you want to calculate your risk in terms of the amount or the percentage. And you can also choose whether you want to get your position in terms of the units, lot size, or the mini lots. So feel free to check them out. I do have the links in the bio. So that being said, let's focus on our setup breakdown on the 9th of July. I'll start with the daily time frame to just walk you through my thought process. I was looking for long position in this market because this market has already come back down to a key level of support, which is also a previous low. And when we came here, we saw some buyers kicking in. We've been seeing it struggling to go back up and down. So for me, I was anticipating that by this day, this market will eventually break upwards and go above this high level. And if you check carefully, you can see that already happened. So the market did exactly what I wanted, but the day of execution clearly wasn't the best, which is a perfect example of you can be right about where you expect the market to go, but you can still lose on that setup depending with where you find your entry. So before I execute on the 9th of July, start by the previous day, I do want it to close bullish to confirm to me that direction that I want to take. So the previous day, which was on Tuesday, closed bullish, which was a very good sign for me. And then I mark the open of the previous day because I like executing above the previous day's open. So now you can move to a lower time frame. I've already shown you the economic calendar, which was clean based on my strategy. So we move back to the 9th of July on the 15-minute. And now the first thing you want to mark is my open for the day. And my trading day starts at 6 a.m. So I'll move this to 6 a.m., which is where I start to anticipate my setups. So When I wake up in the morning, it's very simple. There are only two things I'm looking for. It's either the market has been buying and I'll be needing it to do pullbacks before I can look for a setup, or it's either by the time I'm waking up, the market has already bought and done that pullback. So if I wake up at 6 and the pullback has already happened, I'll just be immediately looking for my entry confluence. If you check this day, you can see for yourself by morning, which was 6 a.m., clearly this market was from buying more than doing any pullback. So that means when I'm waking up, the first thing I'm anticipating is a pullback first. After the pullback, I'll now be looking for my W pattern for confirmation. Previous 1 hour bullish candle, then I'll be taking my trade. So during the day, the market did retrace very, very well. I was just watching the pullback while it was happening. Then at this level here, which was very close to the previous low, it formed a W pattern, which is what I want to show you. And as you can see, if you do understand price action, then when it comes back here, you might anticipate that there should be a low chance of it breaking. If at all, it's going to respect your direction. So if you find your confirmation around this zone, your anticipation is that it should continue going upwards because you're not expecting it to have stronger sellers than buyers. So by that point in time, I was convinced when this market got here that I should look for my entry confirmation, which is usually a W pattern. If I zoom in, you will see that this market did a sell, we had a buy, we had a sell, and we had a buy that closed above the neckline slightly. You'll have to zoom in further for you to confirm that, but if you put a line here, this green candle closed slightly above the neckline. So for me, that was a valid confirmation. The next thing that I do after getting my pattern is I want to take the trade at that retest. The next candle just opened literally at the retest, which was at 2:15 p.m. So at 2:15 p.m. I want to execute, but before I execute, I want to confirm if the previous 1 hour is bullish. The previous 1 hour is the 1 hour candle that opened at 1 p.m. Go back to 9th of July, check our 1 p.m. candle. Is it bullish? Is it confirming the theory that I was anticipating at that point in time? And you can see the previous 1 hour clearly here. From 1 p.m. was a bullish candle. The previous 1 hour being bullish, it means by that time, everything that I'm looking for has come into play. So I went ahead and at 2:15, while the retest was happening, which is here, I took my long position anticipating that this setup would work to my favor. So my stop loss was at 15 pips and my take profit was at 45, aiming for a risk to reward of a 1:3. So that is how I took my bullish setup on UJ. As you can see, it was a losing trade. It didn't go to my direction that much. It started quite well. Just from the opening price, the first two candles went to my side. So it bought with about 11 pips. It had not moved enough for me to set my break even. For me to set a break even, the trade should move at least 20 pips to my direction. So it had done only 11. 20 pips was at about this point here. So it needed to buy at least to this level for me to put my break even, but it came halfway to my break even, but eventually it reversed. So it went down very fast, close to stop loss, went back all the way up. So again, when you see it doing this weekend coming up, you might end up thinking that it's about to reverse and go bullish, but eventually this setup continued dropping strongly, took me out at my stop loss. You can see it sold even further before it was able to regain some bullish strength, I believe, the following day. And that is how I took my loss on USDJPY. I just thought I'll walk you through it because it's very important to show you both my winners and my losses, and also show you the thought process so that you can see that nothing actually changes. Because sometimes when you lose in the market, you might think you did something wrong, but there are times when you just lost because it's part of the edge. But if you keep executing the same types of trades, eventually you should be profitable. So that's basically it for this trade breakdown. I hope you learned something. I'll see you next time, guys. Peace.